An offer and compromise. Is it the best answer for everyone? My name's Darrin Mish, and I'm a tax attorney, and my practice is based in Tampa, Florida, but we represent clients around the United States and throughout the world. And the answer to that question, it's a little bit of one of those rhetorical questions. The answer is no, it's definitely not for everyone, because the offer and compromise program is not a deal or a giveaway program. Sometimes you might even hear me call it a deal to settle for less, but it's not really. What it is, it's a program set up by Congress years ago to help taxpayers who were just in over their heads get a fresh start and to get back into the tax system. You see, typically and statistically what will happen is a taxpayer will forget or fail to file their tax returns for some reason for a particular year, and then nothing happens. And then the next year comes along and it's time to file their tax return, and they're afraid or confused because they didn't file the year before, and so that type of behavior pyramids and cascades until I would suggest that your average non-filer has been out of the system for between 6 and 12 years. So an offer and compromise is a program designed to determine how much you can pay, no more and no less. You see, it's a mathematical algebraic formula, and we'll go over that in a minute. You see, the first step in order to determine whether or not you qualify for an offer and compromise is to take your monthly income and subtract your monthly quote allowable expenses, and that determines what your monthly disposable income in the eyes of the IRS is. Okay, so your second step is then to do this particular algebraic formula. Your offer equals the amount of your monthly disposable income times the multiplier plus your assets. It's not magic, it's just numbers, it's just math. It's that stuff that we've always shied away from since we were kids because it's not all that exciting. But the analysis of an offer analysis will determine whether or not you qualify and how what kind of a minimal amount you can get by with for an offer and compromise. See, if anyone guarantees you an offer after a 15 conversation, you better keep looking, because there's no way that these numbers can be arrived at with any degree of particularity without doing a detailed financial analysis. I've seen taxpayers come in after they've met with some of the quote big national companies, and they were promised an offer and compromise by a salesperson within just a few moments of talking to that person on the telephone. The person on the other end, the salesperson, just wanted to capture a credit card number and get going with the program, and they guaranteed that the taxpayer's six-figure liability could be compromised for as little as just $1,000 or so. And you see, in a lot of these cases, the taxpayer had significant equity in their home, sometimes 6 figures, and these charlatan salespeople were actually promising these taxpayers that despite that significant equity in their home, more than what they owed to the IRS, that the taxpayer would get an offer and compromise. You see, that's just not possible, and I'll show you why here in a second. There's 3 types of offers, though. There's a cash offer, which is payable within 5 months of acceptance of the offer. There's a short-term deferred offer, which is payable within 24 months and equal monthly installments. And there's a long-term deferred offer, which is payable out over the number of months left on the collection statute expiration. What that means is the IRS has 10 years from the date of an assessment of a tax to collect the tax. So if you have 86 months, say, left on your longest collection statute, then your multiplier in a long-term deferred offer, or rather the number of months that you'll be making payments on a long-term deferred offer, would be the 86 months. You'll understand more in just a second as I go through the slide and talking about long-term deferred offers. But back to a cash offer, again, it's payable within 5 months of the offer acceptance, and you can see that algebra program here or problem here on the screen. It's your monthly disposable income times 48 plus your assets equals your offer amount. So in the illustration that I've placed on this slide, if we had $50 in monthly disposable income and we multiplied that by 48, that would equal $2,400. And let's assume 0 in assets for now. That would mean your offer would be $2,400. It doesn't matter if you owe $25,000 or $250,000. Your offer in this scenario, in this illustration, would be $2,400. The second type of offer is called a short-term deferred offer, and you'll remember that's payable out over a 24-month period in equal monthly installments. So take the algebra problem here in this particular type of offer is very similar to the cash offer, but it's monthly disposable income times 60 plus your assets equals your offer amount. So if we take that same $50 in monthly disposable income and we multiply it now by 60 instead of 48, we come out with $3,000. Let's again assume zero in available assets. That means that your $3,000 offer would be paid out over 24 months, which is $125 per month for 24 months. Now I have a little bit of a pet peeve here, and that is if you can only afford to pay $50, how in the world do you pay $125 per month for the next 2 years? And I think the answer is simply that you're going to have to borrow that extra $75, the difference between $125 and $50, from friends or family or relatives or something like that. So I think that's the answer in short-term deferred offers. It has been the answer in every one that we've done. Now the last type of offer, as I indicated, is a long-term deferred offer, and that's payable out over the number of months left on the statute. See, I explained earlier what the collection statute expiration date was, but your algebra problem turns into this. Monthly disposable income times the collection statute expiration date, or the number of months left on the collection statute, equals your offer amount. So if we took that same illustration of $50 and you had 10 years exactly left on the collection statute, then that would be an offer of $6,000 or $50 a month for 124 months. When the collection or the number of months left on the statute is very long, like in this example, I'm not a real big fan of this particular type of offer, and that's because if you default that offer and compromise, then all of the tax penalties and interest come rushing forward. Now you have actually a bigger problem on your hand. The required documents in order to file an offer in compromise are the Form 433A, which is a collection information statement for individuals, and you also need a 433B if you're actually an incorporated business. You'll need the Form 656, which is the offer in compromise form from the IRS. You'll need 3 months of documentation proving your expenses and your income. There's a $150 filing fee, and there's also a 20% down payment requirement for cash offers. Those checks for the filing fee and the 20% down payment should be in separate checks, and they should be made payable to the U.S. Treasury. It's important to note that if you get an offer in compromise accepted, and I hope you do, then there's actually a 5-year probationary period where you must file and pay your taxes on time. If you fail to do so, then your offer will actually be rejected, and it will come back roaring with tax penalties and interest as if you never actually had an offer in compromise accepted. If you have questions about the offer program, or if you'd like someone to help you with an offer in compromise, please give us a call toll free at 888-438-6474. That's 888-GET-MISH, or visit us on our website at getirshelp.com.